The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Easy Money New England.
Oh, can somebody help us here?
We can, because we are real estate and mortgage professionals.
Where you go?
It says come in and browse.
That's right. Come on in, listen up and learn.
How long do you intend to browse?
In a short period of time, our panel will teach you some tricks that might make your house buying easier.
You didn't ask her how long she intends to browse.
You might not be looking for a mortgage today, but we'll get you ready.
You don't look like browsers.
Are you looking?
No, what do browsers look like?
Yeah, maybe I'm half browse.
On his father's side.
This is Easy Money New England
Let's show the lady we're browse.
with your host, Brian
Hey,
Damico.
look at us, we're browse. One more word out of you and he gets it, all right? Come on.
Hello, and welcome to another edition of our show, Easy Money New England, where every week we bring you money-making opportunities or money-saving tips, all in and around the areas of real estate. And today on our show, we have Justin Jarboe from the Jarboe Group. Justin is a real estate agent and runs a full real estate team around the Worcester, Massachusetts area. He was a firefighter for 8 years, and who completed his service as a lieutenant. Justin Jarboe began his sales career in 2005, joining Keller Williams Realty in 2010. He is committed to changing the real estate experience for his clients, always implementing new and creative ways to improve client services. He strives to build long-term relationships with his clients and colleagues using his Realtor-for-Life personal approach. So, Justin, welcome to our show.
Thank you. Thanks for having me.
So I think today, the topic is Worcester. I mean, Worcester is one of the largest cities in Massachusetts and
Second largest in New England.
second largest in New England. That's pretty impressive. So, we don't get out that, it's really the western part of the state. And we're always looking for, right? We're always looking for, investment opportunities, ways to make money. In some of these cities, the numbers just don't make sense. But how's it look in Worcester?
It's really strong right now. There's a lot of VC money really getting invested down here. There's over $150 million being developed downtown, and that's growing every day. So there's a lot of opportunities. I think we're kind of peaking out here, but there's a lot of opportunities in the coming years as well.
Wow. So if the Worcester market, a lot of multifamilies, a lot of, what are people kind of invested in? Is it 1 to 4 units, or is it some commercial? What are you seeing out there?
We typically see like 3 different styles of investors. There's the entry level, which is, getting into condos and small multis, duplexes, things like that. Then we have the 3 to 4 unit investors that just focus on strictly those in like hyper pockets, like certain areas. And then we have the larger scale commercial investors, which are looking for 10 units plus.
And Worcester's so large, I'm sure they have, is there a lot of inventory to choose from right now in Worcester?
There's a decent amount, yeah. So the way I look at it, some of the investments are a little tight on the margins, but out your way, they look excellent,
Right.
So it depends on how you analyze it and what you're looking for. We can find anywhere between a 9 and 10 cap all day long. I just looked at one yesterday that was a 13 cap. So it depends on what you're looking for, what your strategy is, whether you look at it cash on cash return, you're looking at cap rate, or just purely net cash flow.
13% cap rate. I know, your phone won't be ringing if people are listening to the show right now. I mean, that's unheard of around here right now.
Yeah, no, absolutely. But most of them are right around 10, 9 to 10 all day long. We find them higher than that occasionally, but I think in the next coming years, we're going to see even better returns. And,
one of the rules of thumb is, you take really whatever the price of the investment is in 1%. So say it's a $300,000 investment, you can get $3,000 in income. It seems to be that's a safe bet. I mean, they all kind of, you have that opportunity in Worcester?
Oh, yeah, all day.
And what's Worcester's claim to fame? I mean, is the population growing? Is there schools around there? What is the draw to come to Worcester?
I think it's the colleges. We have, I don't remember the exact number, but it's somewhere in the vicinity of 12 colleges. And the pharmacy school is actually blowing up. They're expanding on a regular basis. So part of that $150 million development, I think they have about 100 of it.
Wow, that's impressive.
Yeah, there's a lot of housing downtown.
Yeah, and I think you've got WPI, Holy Cross, UMass Medical School. So there.
Yep, Becker, Clark, the pharmacy school, Worcester State. I'm missing a lot of them, and there's going to be a lot of people that are mad at me.
I shouldn't have got you started on naming them.
So Justin, you get a lot. We publish a small book. Real estate riches. Get started and buy your first home, and we teach people how to kind of start with a small investment and then maybe trade it in, and through the 1031 exchange get into always creating more cash flow for yourself. Have you seen a lot of that in Worcester, where people start, or your clients, that you start off with maybe a 3-family, a 6-family, and you move up from there?
Not as much of the 1031s. We do that on a fairly consistent basis, but the bulk of it is mostly just asset after asset after asset. They're not necessarily selling them; they're holding them for long term. So the short term stuff is mostly 6 months or under. Yep. If they're at 8 months or 9 months, we'll try to convince them to hold it to a year and a day, so their capital gains drop to 15% versus whatever their income is for the year. But so it's really case by case basis. We analyze the person's situation, what they want to accomplish, make some recommendations, and then we kind of deploy some strategies from there.
And so a typical 3-family in Worcester, what would you say the price range is on a 3-family?
So like a C neighborhood, you're looking in the high 2s right now. An A neighborhood, you're up to 400.
Wow.
In like excellent condition.
Wow. And what would you say the rents are on a typical, say, 2-bedroom in Worcester right now?
Most of them are 3 beds.
3 beds.
So I'll give you an example. I have a 4-family down the street on Shrewsbury Street. And we just rented the second floor for $1,650. That's a 3-bed. But we went through it. We did it right. Plastered the ceilings, new electrical, new plumbing, vinyl plank floors. We got a great deal on the kitchen. So we ended up with a shaker style not dovetail. Yeah, dovetail. Whatever the joints come together there.
Nice.
And we did an entry level granite with a laundry room and everything else. And that's about 1,000 square feet, 3-bed. And we got $1,650 for that. So that's kind of on the higher end. If it's like mint with like hardwoods and tile everywhere, and if it's in the right neighborhood, you could be up to about 1,800. Your standard, a little bit distressed, dated, will be anywhere from 1,000 to like 1,350-ish, something like that.
Interesting. And if people listen to the show right now and they they're saying, "Wow, this sounds great," but Worcester's a little far from me. Do you offer property management, or is it good property managers in the area where people say, "Hey, I want to invest, but I know I can't get there to do all the work"?
Yeah, that's easy stuff. I mean, that's simple. We'll get that set up, no problem.
Oh, you guys do property management as well?
We don't right now. It's on the forecast for me to open one. So we're scaling step by step. The first thing was getting the team up and running. Then we launched the investor division. So we have someone that's solely in charge of investments, finding them on a regular basis. A lot of the stuff that we're finding too is not on market. It's off market stuff. But yeah, the next phase is the property management. We would be doing that probably within 2 years.
That's great.
Start that.
That's great.
Yeah.
So are you seeing good occupancy rates? I mean, are there a lot of people out there looking for rentals?
Strong. Oh, yeah. Yep. So it's a good thing for landlords, not a great thing for tenants. So there was an article that was just published where they analyzed every major U.S. city. And it went by, what the bang for the buck as far as, what amenities you get by the location, walk score, a numerous amount of things they analyzed. And for the money, Worcester was actually rated worse than Boston and New York City right now.
Wow.
So the rents are skyrocketing right now. They've never been higher that I've ever seen anyway.
And they're all rented, right? I mean,
there's hardly any vacancy at all.
Any vacancies.
And that's why you get some of these big firms coming in doing $100 million developments. I mean, they're not idiots. They know what they're doing.
Oh yeah. I mean, that must be a lot of excitement around the area for sure.
Oh, big time. Yeah. So the city's cleaning up part of Main Street as well. So I talked with someone that works with the mayor. I'm not going to name any names, but a couple of them. And they've implied that some of these investors really need to clean up the facades of some of these buildings. And if they're ignoring it, they're in threat of eminent domain. They're serious about cleaning up that area of the city. Not that it needs to be cleaned up, but it needs a refresh, right?
Yeah.
So they want it to look a certain uniform way.
Like most cities, they definitely need to freshen up. You mentioned a little bit about your team. Let's talk about your team. So, I was looking at your website a little bit, and it looks like you work with your wife. How does that work out on your team?
Yeah. So that was the quick story of that was she was in a luxury construction company. She was a project manager's assistant, and she had a real estate license, but she didn't want to come over right then. We were, with the benefits and having a job, a steady paycheck was very appealing at the time. And so I was trying to get her over for quite some time. And then at the time I had an assistant and a showing agent. So there were 3 people on the team. I was just scaling it. And my assistant left for her dream job, which you certainly can't blame her for that. She was great. And then the showing agent and I parted ways. And I had 18 pendings, and I was about to go on a business trip where I wouldn't have cell reception for 3 days. And so I called my wife, and I was like, so the team is me. And so if you ever thought about getting into real estate, now's the time. And I don't want to persuade you one way or another. If it's the right time, do it. If it's not, I'm never having this conversation ever again. We're going to let your license lapse, and we're not going to pay the fees. So she gave her notice the next day and then came over. And I taught her what I could in a short period of time. And then, like I said, I was out, and I didn't have reception for 3 days on a business trip. And she kept it all together. And since then, we've been just grinding and working strong together. So, you definitely got to have some boundaries where, if you're at home and we don't want to talk business, it's just like a simple, no, I don't want to do that. And we both respect that.
That's great. I mean, so if you're listening out there right now, when you use Justin as a real estate agent, you're actually getting the power of a team. He has a full team where, I believe that real estate agents that have a team are much more productive, can get things done quicker. You're tapping into a network, right? And they have access to all the people that you're looking for: property management, mortgage, title. It's great to kind of get together with a big team like that. So, Justin,
the easiest way to explain it would be, if you're a solo real estate agent, there's nothing bad about that. You're going to do a little bit less volume than a team is capable of. But an individual agent, if they don't have an assistant, they don't have other people working for them, they're a generalist. They're putting signs in the ground. They're doing advertising. They're doing the listing appointments. They're working the buyers. They're doing the showings, the open houses, the marketing, the books, the everything. So whereas a team, you have specialists in certain areas. So you have a specialist for showings. You have a specialist for listing. You have a specialist for investing. You have an admin, a transaction coordinator, a bookkeeper, someone that manages the back end. So generalist versus specialist. Brian, if you went to your dentist and the person checking you in was doing your work, how would you feel about that?
Yeah, not so good.
Right. So by all of us coming together, we can bring a little bit stronger atmosphere and help the client a little bit more.
And Justin, if someone's listening right now and they're saying, you know what, Worcester area sounds great. I want to get a list of properties, something that makes money, especially on that cap rate that you were mentioning. How do they get in touch with you?
Easiest way is to just send me an email or call me. My phone number is 508-322-1234. 1499. Again, 508-322-1499. Are you guys able to put up my website or the email address at all?
Yeah, we'll be able to do that.
So I don't have to do that.
Yeah, we'll do that on the show notes after the show.
Okay.
So if anyone wants to take a
buy
look
with
at that.
Justin, sellwithjustin.com. Those are 2 web pages, but that'll link back to the main page. But
Great.
yeah, just give me a call, send me a text message, whatever. We'll meet up and go through whatever you're looking to do, and then we'll make sure we back into it and accomplish your goals.
So Justin, if you have a brand new investor, how do you kind of take them through? It sounds like you educate them. Sounds like you get them on the right path.
Oh yeah. Yeah.
So if you have a brand new investor, what would be some good strategy or some good education to kind of give them when they're first starting out?
We always meet first, and then I kind of feel them out, just kind of see what they're looking at, what some of their goals are, some of the terminology that they know or don't know, and then I would advise specific books from there. So if there's someone brand new and they really don't know what they're doing yet, they haven't done the research, they know it's something that they want to get into but don't know how, we meet, we talk about it and say, are you a buy and hold investor? Are you a buy and flip investor? Are you trying to do 1031 exchanges? Are you more on the IRA side of things where you want to do more retirement planning with self-directed IRAs, and so you don't have to pay any taxes on your rents coming in, things like that. And then so we kind of funnel them down into one area, and then we would recommend a book. From there, they read the book, then they come back and meet with us. So what we found is a lot of people say they want to do it, but when it comes time to actually putting the work in, some of them fall off. And the ones that actually read the book and then come back, we know are really serious and they're taking this seriously, which is what we want. We want them to be as accountable to their money as we are as a fiduciary.
Yeah, I mean, just like mortgage people, I own a mortgage company. Not all loan officers are created equal. It's the same thing for real estate agents. I mean, I know a lot of real estate agents that have no idea what a self-directed IRA is. So I highly suggest taking Justin up on this, because you go to another real estate agent, probably 95% chance that they don't know what a self-directed IRA is. Would you say that's fair?
Yeah, no, it's accurate.
Because people are investing in real estate through their retirement account, and it's tremendous. It's a tremendous way to go. People don't want to keep it in the stock market anymore. I mean, they call it. Just last week we had a podcast, and he called it the casino of Wall Street.
It really is. That's a great way to put it.
I mean, if
you really look at it too, unless you're in an index fund, it's hard to really track what your actual cash return is, because there's fees built in, there's transfers, there's all of this stuff. When you really boil it down, most people on their 401ks or IRAs or mutual funds, or put it into whatever bucket you want, they're getting 7%, 10% is really the max that we ever see.
Right.
Some people say they get a little bit more. They might be day trading or doing whatever, but the average is about 7 to 7.5, I think is what the article that I read was. With real estate, you're going to be over that, just on cash flow. So cash in versus cash out on net cash flow, you're going to be higher than that. And then the other better part of it is you have a physical asset, with stocks and things like that. There's no physical thing there. So with real estate, it also appreciates. So yeah, there's market ups and downs and whatnot. And it's usually around 10 years cycles, 8 to 10 years. But if you're holding it for a long period of time and you have a mortgage, they're paying down your mortgage. So you're getting net cash flow, you're getting mortgage reduction, and you're getting appreciation. So there's 3 opportunities to grow well.
Yeah, and back in 2008, when kind of everything fell out from the bottom, the real estate people, their values were down, but they didn't care. The cash flow kept coming in.
Doesn't matter.
On the stock side, that was real money. I mean, a lot of people were on suicide watch. I mean, the market was down that much. I mean, over 50%, and that's real money. Whereas real estate still had its income coming in.
Right. So just think about that. If you have an annuity and they're paying out a certain amount, and your value drops, but you're still getting that money, and it's going to come back. I mean, that's pretty solid.
Yeah, I mean,
it's basically what real estate is.
Real estate is the best investment you can make. I mean, I've seen it my whole life. I just wish I bought more of it when I was younger. Sold a lot of it, but never really got as much as because the market back then, you could buy a 3-family near Boston for $100,000.
Yeah.
And those same 3 families today are probably worth $700,000-800,000. So I
Oh,
mean,
yeah.
you're not gonna get that in the stock market. Plus, make money all the way through all those years. I mean, it's a great investment.
And I think
And you're in the driver's seat too. So,
Right.
hold on, my battery was
No, no
dying.
problem.
Apologize. You're in the driver's seat. You're making the decisions. You're in control. With stocks, you're relying on the board of directors to make the right decisions.
It's true.
I think a key point too is if your portfolio is big enough, you don't have to do one or the other. I mean, it could be part of a well-balanced portfolio.
I think that to get to that point, real estate's probably the big rock that goes in, and that's how you create your portfolio, because it's so difficult. And you might get lucky, you buy at the right time, the value comes up. And within our book, we actually promote refinancing, getting the down payment for the next purchase, or,
Yeah, I mean, I think
just keep leveraging that asset.
it's not a bad time. A lot of people are sitting on a lot of equity in their houses, based on the market right now. And,
absolutely.
So they can certainly take some of that equity out as an investment.
Well, he's got me thinking, to invest in Worcester, because if you have some equity and you're sitting on it and you're not doing anything with it, and you can get 10% return on a
You're
property in
losing
Worcester.
3 every year.
Right. So, you should definitely look at that, right? So if you're sitting on a bunch of equity, definitely give Justin a call and see if you can kind of make that return, because, Worcester, how's been the appreciation, in Worcester the last few, I know that everything's kind of gone up appreciation-wise. But what did they get hit tremendously back in 08 as well?
So the appreciation rates historically, hold on one second here. So I had a call coming in, and then that screwed it up.
Yeah.
Can you guys see me now?
Yep.
Yeah, you're back.
All right, good. So back when the market kind of tanked, historically we were at about a 4% appreciation. When it dropped, the new curve from all the economists predicted a 3%. And then every city or throughout the U.S., there's little pockets that are higher and some are a little bit lower. We were a little bit over the curve here in Worcester. In some areas, depending on what you're investing in, we saw upwards of 8 to 10% appreciation in 1 year. It was insane.
Very interesting.
Yeah.
What do you think?
Just from last year, so I just ran this stat yesterday for a specific client. If you bought a single-family home in Worcester in, I believe it was October, through where we are right now, it was like 9.03% appreciation.
So it's definitely Worcester's on the right track for sure.
Maybe we need a road trip to Worcester.
Yeah, I know.
Yeah, come on down. One thing I do want to clarify, though, before we move forward, was the comment about pulling equity out and things like that. We're in a really fortunate situation where our business is growing pretty exponentially, and 1 to 2 deals isn't going to make or break us. It doesn't matter. So we're really, from a contribution standpoint, I follow Dave Ramsey pretty well. He helped me get out of a really bad situation. And so I'm really keen on don't over leverage yourself as well. So if you do have some good equity, then certainly deploy that if you feel comfortable with it. But you definitely don't want to over leverage yourself, especially in a market that's shifting right now.
Yeah, no, it's a good point. It's everyone has their own different strategy. We've interviewed so many people, and they all have a different kind of take on that. My only take on leveraging that asset is if you have the equity and you're not using it and you can get a 10% return, that's a good thing.
Oh yeah.
But that's a risk. Some people are risk averse, and that's really not for them, and they want to just keep on, going steady. But yeah, no, I'm glad you pointed that out, because it's not. It's always an opinion of kind of how to get there. And in real estate's the long game. It's not a get rich quick scheme. So, you definitely going for the long game, and everything has to kind of make sense. But that makes sense. So for example, if someone has equity right now, say they have 2 pieces of property, and, they really don't want to come up with that 20-25% on that third property. Do you get involved at all, maybe talking to the seller, seeing if they'll take paper or anything like that to kind of get that third investment going?
Yeah, we have. I mean, there's so many different avenues to do it. So holding paper is one way. There's second mortgages. There's hard money, private financing. I mean, there's no excuse not to invest.
Right.
The money is the easiest thing to find.
Yeah, I mean, I've seen this private financing wasn't this, easily accessible 6-7 years ago. I mean, it's booming.
Yeah.
Everyone's lending money on the street, it seems like.
Yeah, I got access to about $100 million right now.
And are you buying, are you kind of getting people together and buying properties as like a tenant in common type of situation?
No, so I do some myself, and then I have a joint venture as well. So it's just there's just two of us.
Yep.
So we started investing about 2 years ago. We bought 8 different properties, flipped some, held on to some of them, and we took a break for about 6 months. I really want to focus on building my team so I can help others and get to the point where my wife can actually manage the operations without me. So I can step aside where I'm not the rainmaker anymore, have that system kind of run itself, and then I can contribute in a larger way, stepping aside and starting to get into a little bit more full-time investing, helping some of our investor clients, and then personally investing with the JV and myself.
So that'd be like more syndication, kind of?
That'll be one aspect of it. So I will probably put together a PPM in the next couple of years. So
very interesting. Well,
yeah.
Well, Justin, that was great. I think we brushed on. I mean, basically, you're Mr. Worcester. I mean, everybody that's listening today. I mean, if you have any opportunities in the area, really in Worcester or that part of the state, definitely contact Justin. Anytime I get anything that comes across my desk that says Worcester, you're my first call.
Good. Yeah, even some of Western Mass. So like Springfield's going crazy right now with the new MGM Grand.
Yeah.
That casino's launching this month. Their own grand opening is this month, and I have many opportunities to invest in Springfield if you want to go that far, where the returns are even up to 15%.
That's interesting because that casino, I mean, some people say casinos bring bad. I think it brings good. I mean, we have one coming up in Everett, and the market's exploding around there. I think so. Springfield should be a great opportunity.
Oh, it's huge. So it's a tax benefit to the city, a lot of employment, and it's going to draw people into the city, and they're gonna throw money around. They're going to be going to restaurants, they're going to be going to the casino, they're going to be doing stuff like that.
Yeah,
so
I just saw the commercial. I just saw the commercial this morning on Springfield. So that's a brand new casino that's getting open.
Brand new, yeah, ground up.
Oh, wow.
Brand new. MGM Grand.
Didn't Springfield already have a casino, or was that somewhere else?
I don't know. I know, Foxwoods is in Connecticut, Mohegan's in Connecticut.
What was the one with Doug Flutie has his restaurant there, and is that Twin River?
I don't know. Twin River's in Rhode Island.
Yeah. No, that's not the one.
Yeah.
Yeah. Oh, that's
great. It's right off the pike, so it's it's good. It's going to attract people from New York even.
That's excellent.
Because it's right. You go even Hartford. You go straight up 91, and you're kind of right there.
So is Springfield a bordering city to Worcester? Springfield and Worcester?
No, it's about 45 to an hour west on the pike.
Okay.
So it's about the distance from Boston to Worcester as Worcester to Springfield. But that's another large city that's been a little depressed for a little while, and it's in its recovery period. So there's a lot of opportunities out there. I know of. I don't want to throw the numbers around or anything like that because it's not public yet, but there's plenty. Let's just put it that way.
Plenty to go around.
Plenty. Yeah.
All right. Well.
So.
We want to thank you for being on the show, and if you're driving around right now, listening to the podcast, or you're on your treadmill, whatever you're doing, definitely look up the JarboeGroup.com. Look at our show notes, and if you have any questions, give us an email over at easymoney@newfed.com, and we'll see you next week. And again, thank you, Justin.
Thank you. Yeah, I appreciate it.
Have a good one. See you next week.
It's a new day, it's a new way. Call 877-NEW-FED-1. It's a new way.
Hi folks, it's Brian Damico, owner of NewFed Mortgage. People always ask me, what's the difference between pre-approved and pre-qualified? Well, pre-approval is a more rigorous process than a pre-qualification. It's a written commitment from a lender to extend a mortgage to you for a specific amount and time period. With a pre-approval, you'll be able to set your budget, negotiate confidently, and close faster. Typically, sellers will only accept offers from those who are pre-approved. That's why you need to call NewFed and ask about our pre-approval purchase program so that you get a real pre-approval and get on the fast track to purchasing the home of your dreams. Don't waste time dealing with big banks. Get pre-approved at NewFed today. We're local and we're here to help.
877-NEW-FED-1.
Subject to credit approval, equal housing lender, NMLS number 1881. Call or see website for details.
877-NEW-FED-1. It's a new day, it's a new way. Call 877-NEW-FED-1. It's a new way.
Hi folks, it's Brian Damico, owner of NewFed Mortgage. I've met so many people who want to make money in real estate but just don't know how. They pay for expensive real estate courses and seminars and they just left more confused. This is why I wrote the book, Real Estate Riches. Take the first step and buy your first home. Whether you want to buy your first home or an investment property, I share some of the best secrets to real estate success in my new book. Just visit briandamico.com/free book to receive your coupon from Amazon. When you finish reading, give me a call so we can set up your financial future together. That's briandamico.com, briandamico.com/free book. Sign up and receive your free book from Amazon. Subject to credit approval, equal housing lender, NMLS number 1881. Call or see website for details.
877-NEW-FED-1.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.